Okay. Hello aspirants, a very warm welcome to Oliveboard. This is Rohan Dangi, your faculty for the day. And today we will be completing our session on the 2018 paper. There are a few MCQs which are left to be discussed, so let's discuss that. Okay. Yeah. So we were on question number 46. It is about the globe framework. So the globe framework is used to access cultures across the world. What does globe stand for? As I've told you last time, it's a very simple abbreviation which has been asked in the exam. Therefore, it's a very easy question. The answer to that is global leadership and organizational behavior effectiveness. So again, it's in the notes, so very easy to formulate the answer. Question number 47 is a tricky question. This is a very typical question that they ask in RBI. What is question number 47? Organizational development is a collection of change methods that try to improve organizational effectiveness and employee well-being. There are various techniques for bringing about change. In most of the approaches, in most of them, the approaches are problem centered, wherein a problem is identified and the required solution is given. But in this model, its focus is on the positive. It seeks to identify the unique qualities and special strengths as organization has and where members can build on it to improve performance. Okay, what is the model? So they have given you a very detailed description of a particular model. Typically, this is what RBI does. When it comes to management, they will give you a particular model and they'll expect you to answer the question. Okay, just give me a moment. Yeah, I think now you can see. So question number 47 is on your screen. Organizational development is a collection of change methods that try to improve organizational effectiveness and employee well-being. There are various techniques for bringing about change. In most of them, the approaches are problem-centered, wherein a problem is identified and the required solution is given. But in this model, its focus is on the positive. It seeks to identify the unique qualities and special strengths an organization has and where members can build on it to improve performance. What is the model? So as I've told you before, they will first give you a model. Typically, they give you a model, they explain the model, and then they only expect the least from you. What is that? To be able to answer what is that model about. So the answer here is appreciative inquiry. Right, at the outset you might feel that you don't know the answer to this, but as you associate with Oliveboard, as you start going through our curated courses, you will realize that these are sitters. I think personally speaking, and even from the point of view of a lot of students, this one for 2 marks is a fairly easy question. This is like, these are easy pickings. Question number 48: return on investment comes under which ratio? Profitability, revenue, coverage, liquidity, solvency. ROI. We have come across this term in a lot of editorials. We have come across this term in a lot of coursework also. So ROI comes under which ratio? It comes under the liquidity ratio. Okay. Liquidity means the money that you can use freely. Now, what is return on investment? Suppose you have invested, say, suppose 60 lakh rupees in a particular scheme or in a particular asset. Then, after 5 years, the return that you get on that. So, suppose after investing 60 lakhs, within 3 years, you are getting 1 crore rupees. So, that is your liquidity because you are getting 1 crore rupees in your pocket after the deduction of tax. So if there is positive return on investment, obviously whenever ROI is only when the return is positive. Negative return on investment is something that you don't consider under liquidity. So ROI comes under the liquidity ratio, the money that you can be freely used after investment. Okay. Question number 49 may not be visible. The options may not be visible, but I'll make all the effort to ensure that I repeat the options. So question number 49, the most important factor driving prices of stocks is option number 1, interest rates, option number 2, current events, option number 3, expectations, option number 4, economy, option number 5, earnings per share. So even if you have a very basic idea with regards to investment in shares, stocks and debentures, you will know that the answer is EPS, that is earning per share. See, what is the most important factor driving prices of stocks? Other factors also drive stocks. These are also determining factors. Interest rates determine the price of stocks. Current events obviously have a close linkage with the prices of stocks. For example, the Russia-Ukraine crisis is having a negative impact on the stocks of nickel, palladium, xenon, and so on and so forth. Expectations, speculation, expectations is associated with speculations, and that also is a big factor which drives the prices of stocks. Economy, of course, but the most important factor, look at the words which are chosen to frame the question here. The most important factor driving prices of stocks is earning per share. Why, by the way? Because when you talk about earning per share, for example, you have 20 lakh rupees which you want to invest. Of course, the interest rates, of course, the prevailing interest rates, the prevailing current conditions, the attendant market expectations, the size of the economy, the health of the economy are all factors which will determine the prices of the stocks. But at the end of the day, you will invest in a particular stock, for example, ICICI or SBI or Nestle, by looking at and by studying very closely the earnings per share. It is a return, it is the earnings that you will earn per share that will determine whether you will invest in that stock or not. Because trust me, other factors are factors which are beyond your control. But the fifth factor, which is earning per share, is something which you have at your disposal, which you can study, right? So it will help you in taking a considered decision or a knowledgeable decision. So the most important factor driving prices of stocks is earning per share. Typically, what happens in these kind of questions is that students, because they feel that all the options are correct, they become a little tentative. At the same time, they become reluctant in marking such answers without realizing that this is just a typical ploy by the examiners to trap you. The answer definitely has to be the one which is most closest to the question, and for that you have to read the questions carefully. Therefore, at this juncture, I'll offer you a pro tip, and the pro tip for today is that please read the question statements carefully. Please consider the question statements. Please take a deep breath. Do not get unnecessarily bogged down. Do not get flustered. At the same time, do not get excited because of the easy nature of the questions. Being unequivocal, being and what you can say, being equanimous is very very important while you're writing your exam. Okay, so these are very easy questions, it just requires your presence of mind. Question number 50, revenue from operations is rupees 4,50,000. Gross profit is 25% on cost. Operating expenses is rupees 22,500. Calculate operating profit ratio. The answer to this is 15%. Okay. Now let's take a look at the solution. Now this is a mathematics or a formula driven question. Now before I dive deep into the solution, let me tell you that at the outset students feel quite scared, or students feel overwhelmed when they are confronted with such questions in the exam. Looking at the numbers, looking at a mathematical equation, students get flummoxed, they get overawed by the situation. You don't have to, these are straightforward questions. All you have to do is go through our lectures, go through the notes, go through the formulas, and these are straightforward questions which will fetch you 2 marks instantly. Now let's take a look at the solution. So the cost of revenue from operation is 100. That is an assumption. So gross profit is how much? 25% on cost. That would be rupees 25. Revenue from operation is 125 because you will add 25 to 100. Revenue, so when revenue is 4,50,000 rupees, cost of revenue from operation is 4,50,000 into 100 upon 125. Right, so that is 3,60,000 because 125 corresponds to 4,50,000, so 100 will correspond to 3,60,000. So that is the cost of revenue from operation. Right, now how do you calculate the operating cost? Operating cost is equal to revenue from operation minus operating cost, which is 4,50,000 minus 3,60,000, that is 67,500. And what is the operating profit ratio? Right, here we are talking about the ratio. So when the ratio is asked to you, you will multiply it, you will multiply the division by 100. Right, so that will be 67,500 upon 4,50,000 into 100, that is 15%. So what is the operating profit? 15%. This is a simple mathematical calculation at the 10th standard level. All it requires is a little bit of common sense. And chalo, let's assume for a moment that you don't have a clue about this kind of question. Just apply common sense and logic. And for people who are not well versed with mathematics, or people who are generally they harbor a phobia of maths, for them our lectures at Oliveboard regarding management and finance will help you and will keep you in good stead and good shape to answer such questions. So without much of a further ado, join Oliveboard courses, get associated with us, and enjoy the benefits accruing from these exercises. Anyways, question number 51. The dash may indicate that the firm is experiencing stock outs and lost sales. The options are average payment period, inventory turnover ratio, average collection period, quick ratio, none of these. So the answer is average payment period. Okay, the average payment period may indicate that the firm is experiencing stockouts and lost sales. Again, a very easy question. It is a 2 marker, but it will give you an answer once you go through the definition for this particular topic. Now there is a passage given, and based on this passage you will be expected to answer 6 questions. 4 questions, I'm sorry. 52, 53, 54, 55. So the Bankruptcy Code is a one-stop solution for resolving insolvencies, which previously was a long process that did not offer an economically viable arrangement. The code aims to protect the interest of small investors and make the process of doing business less cumbersome. So quite naturally, this is about the Insolvency and Bankruptcy Code, which was introduced in India in 2016. Right, basically this was about the exit clause which was offered to a lot of companies, especially companies belonging to the MSME bracket, so that their exit was smooth and so that their bad loans could be restructured or could be sold off. So under the Insolvency and Bankruptcy Code, NCLT needs to admit the case within. By the way, what does NCLT stand for? NCLT stands for National Company Law Tribunal. So if a company is going in under bankruptcy, it has to admit the case within how many days? So the answer to that is 5, that is 14 days. Within 2 weeks, the NCLT needs to admit the case. Right, for example, a company is now going bankrupt. So it will simply have to approach the IBC within 14 days of what you can say the admittance of the case. Okay. For this, again, do not feel bogged down. All of these we had already covered in our 2018 comprehensive series on insolvency and bankruptcy code, and which will we intend to do in the coming year as well, including all other aspects of current affairs which have been in news in the past 1 year. Question number 53. Order of claims in waterfall structure IBC is. See, before talking about the answer, I want you to understand that insolvency and bankruptcy code is like a company which is getting liquidated. If the company gets liquidated, then suppose for example, a company was valued at 100 crore rupees, but now it is getting liquidated because of losses due at about 30 crore rupees after auctioning process and after restructuring of loans. Now the 30 crore rupees which is coming into the system, that has to be distributed amongst people. that has to be distributed among shareholders, that has to be distributed amongst the employees. So in what order will the priority be given? When you talk about the waterfall structure, it is the order of priority that is given while the claims are being settled after the IBC resolution. Correct? So this they are asking about the priority when they are talking about the waterfall structure. So the answer is 2. First of all, insolvency costs, whatever insolvency costs which are incurred, first of all those have to be paid, because obviously the insolvency professionals must have worked day in and day out to work out a solution. Then secured creditors, creditors meaning the loan, the banks or the financial intermediaries which may have given the loan would want to recover a part of it or a portion of it. So secured creditors, and then the government dues. If at all there is some money left, then the government shall also be paid. So this is the order of claims in the waterfall structure of IBC. Okay. First priority is for the insolvency costs, then secured creditors, which are nothing but your financial intermediaries, and of course after that government dues in the form of any subsidy or any kind of government assistance which may have been forwarded to the firm initially. Next question. Which of the following segments are covered by IBC? Individuals, partnership firms, LLP companies. What are LLP companies? Limited liability partnerships. So there are three options. Now there is a combination of options given: A, B, and C, A, B, and D, A and C, and A and B. So the answer to that is 5, all of the above. That is individuals, partnership firms, LLP, that is limited liability partnerships, and companies. All 4 of them. Okay, this was a very easy question. Again, under IBC, who will approach DRT and NCLT? DRT stands for Debt Recovery Tribunal and NCLT stands for National Company Law Tribunal. As I've told you in the previous question, if you are a company and if your company is going for bankruptcy or filing bankruptcy, then you will approach the NCLT. But if you are an individual proprietor, right, if you own the business individually speaking, then you will approach the DRT, that is Debt Recovery Tribunal. So the quite naturally the answer is DRT is equal to individuals, partnership firms, and NCLT is equal to companies and limited liability partnerships. Correct. For example, if you're a kirana shop owner, and if your kirana shop is now going is making heavy losses because of online delivery and because of entry of the big retail players, and if your business is closing down, then as an individual you will have to approach the DRT. But if you have a limited liability partnership or you have a private concern, like for example Air India, then you will approach the NCLT, that is National Company Law Tribunal, under the IBC. So there are two different verticals under which the companies or individuals can approach the IBC for further resolution or for further liquidation. Okay. Question number 56. Inventory management system. Inventory management system with focus on minimizing holding, ordering storage, and stock out costs is, option is economic order quantity. Again I will repeat, inventory management system with focus on minimizing holding, ordering storage, and stock out costs is economic order quantity. So the answer is 3. It's a very easy question. Again, you'll just have to go through our notes, and it is given in quite explicit terms in the syllabus or in the notes. So a very easy 2 marker I would say. Use of cards for inventory management is called Kanban, bin card, Scrum, Kaizen, just in time. Answer is Kanban. It's a Japanese methodology which is used. So we have explicitly and elaborately talked about the Kanban system, the Kaizen system, bin card, and the Scrum system, right? So the option answer to this is Kanban. Question number 58. Control system which automates the process of control is cybernetics. The answer is cybernetics. Various options are given like robotics, humanistic psychology. Okay. So I can see that a lot of people are answering also, which is a very good thing. So keep on answering the questions. Question number 59. RBI inflation target under MPC. This is such an easy question, boys and girls, such an easy question. It is 6% with a what you can say allowance of plus minus 2%. That it is 4% plus minus 2%. So the answer is 6% and 2%, right? The RBI inflation target under MPC is 6% to 2%. Right? Why? Because the median figure is 4% with an allowance of 2%, that is 2 to 6. Okay. So this is something which is such an easy question. Okay. Anybody who feels that the answer is A is wrong, it is 6 and 2, because the median is 4% plus minus 2%. So that is, the range is 2% to 6%. Moving on, which of the following is not liquidity management tools used by RBI? Cash reserve ratio, statutory liquidity ratio, open market operations, repo rate, interest rate swaps. So as I've told you, I don't know whether you have gone through my lectures in the past, but I have spoken at length about liquidity management tools. There are certain quantitative tools and there are certain qualitative tools. In the quantitative tools, we have explicitly and quite elaborately spoken about the cash reserve ratio, statutory liquidity ratio, open market operations conducted by RBI, and repo rate. So quite naturally, by using just merely elimination method, you can come to the conclusion that interest rate swaps is the correct answer. Okay. Question number 61. Which of the following is correct? Repo injects liquidity, reverse repo sucks liquidity, bank rate sucks liquidity. This is an application based question, one of the most beautiful questions that RBI has framed. So repo means repurchase options. Repurchase of what? Repurchase of government securities. So RBI lends money to the banks at the repo rate. So repo injects liquidity. Is that correct? Yes. Then reverse repo sucks liquidity. I don't know. Right? You'll have to think. Bank rate sucks liquidity. See, bank rate and repo rate are two different things. Bank rate is generally associated with long-term loans. So long-term loans don't have a bearing on, or the rate of long-term loans don't have such a bearing on liquidity. That is the money available in the market. It is repo rate and reverse repo rate which have a bearing on the liquidity. That is the cash available in the market. So repo rate injects liquidity and reverse repo rate sucks liquidity. When repo rate is lowered, there is more liquidity in the system because interest rates become cheaper. And when reverse repo rate is what you can say is tightened, then it sucks liquidity out of the system. Okay. So what is the relation between repo rate, reverse repo rate, in liquidity, inflation? All of that is quite elaborately covered in our finance lectures. Stay tuned. You will get a good grip on all of this. I will myself make sure that I explain all of these concepts in a lucid manner. Okay. So anyways, question number 62 to 64. Leadership and management are the terms that are often considered synonymous. It is essential to understand that leadership is an essential part of effective management. As a crucial component of management, remarkable leadership behavior stresses upon building an environment in which each and every employee develops and excels. Leadership is defined as the potential to influence and drive the group efforts towards the accomplishment of goals. This influence may originate from formal sources, such as that provided by acquisition of managerial position in an organization. So this is the paragraph. Now let's take a look at the questions. Leadership theory, where leaders have complete trust in subordinates and seek frequent suggestions from them and use them constructively, is it is called as participative theory. Now, for example, if you don't know the answer to this, even then by using common sense and logic, you can answer this question. You can definitely take a chance. When a leader takes the opinion of his subordinates and juniors into cognizance and acknowledges that, that is quite naturally participative development. So the answer has to be participative theory, right? So at times my answer or my advice to you is that please also be quite alert and also use common sense while answering this. Now this was such a sitter, no? For 2 marks this was such a sitter, right? Good evening, Krishna. Question number 63. Leadership theory, where leader removes obstacles to reach objectives, is the answer is path goal theory. Right? When you talk about reaching objectives, you're talking about goal setting. So that has to be path goal theory. Question number 64. Subordinates' perception that the supervisor has power to punish or withhold key resources is termed as coercive power. When you force somebody, when you force the hand of somebody, that is called as coercion, right? So when you talk about the power to punish or withhold key resources, these are manipulative practices which can be covered under the bracket or the umbrella of coercion, right? So this is coercion. Answer is 1. Question number 65. According to the trait theory, an individual who has traits relevant to leadership emerges as an effective leader. Which of the following traits is not required to become the effective leader? Options are knowledge, objectivity, communication skills, emotional stability. All are required. So the answer is all are required. See, trait theory again comes under the leadership and communication theory. In our courses, I have covered this trait theory in great detail. Trait is what? Traits are inherent and deeply embedded and entrenched habits, right? Some people have the trait to be absolutely pinpoint and honest. Some people have a trait to have what you can say have a what you can say pinpointed instinct, right? Their gut feeling never goes wrong. Some people have the trait of getting problems solved. Some people have the trait of simplifying problems. Some people have a trait of complexing the problems, right? Complicating the problems. So traits are inherent characteristics of individuals which come to the fore, especially when individuals are placed in a competitive working environment. Okay, so the answer to that is 5. All are required. Okay, so I've covered all of these things in the notes. This demonstrates what? This demonstrates to you that all the questions that we have covered, 95% of the questions from 2018 have been covered in our course syllabus. Okay, and I can claim with a fair degree of accuracy and with a fair degree of verifiability that that same holds for 2019 and 2020 papers. We will be discussing a lot of RBI grade B papers. See, the best thing if you're starting your preparation right now is to go through these papers so that you'll understand what does RBI expect from an aspirant. So stay tuned for all these sessions which are conducted on Monday. I'll be conducting 6 more sessions to cover 2 more papers. Very, very important. Will add a great deal of value to your preparation and will give you a perception of what RBI expects. So till the time we meet next, this is Rohan Dange signing off from Oliveboard. Thank you. Take care and be good.